Andrew, what happens to dollar in this, given what we were just talking about?
Yeah, so it's a very interesting scenario for the dollar here because you have these scenarios where if we have a real weakening in U.S. growth, then we know the dollar will rally because there'll be a big risk off. If you have a big increase in U.S. growth and you have a bottoming in terms of some of this data, and it looks like the U.S. is still the outperformer, then you'll also have a stronger U.S. dollar. What you've had recently is actually, like we were talking about, globally, things are maybe looking a little bit better, at least not as bad as they were a couple months ago. So for those reasons, you've actually had a weaker dollar. I would still say that those more extreme scenarios have become increasingly likely, where either you'll get a real outperformance from the U.S. or you'll get globally a weakening. Both of those would be stronger dollar scenarios. But for now, in the near term, we have this kind of weak dollar trend that's persisted.
Well, I know you're not in speaking terms of Tobias Lefkovich. That's a safe way to not lose money. But with that said, what is the 12 months forward GDP call of you and Catherine Mann for the United States of America? Are you at 2.0%?
We're almost exactly at 2.0%. And I think that's consistent with what we saw in the Q3 data, where we were at essentially 2.0%. It's still a story where consumption is really driving things.
Is that solid? You got to help me here with clarity today. Is that solid economic growth?
I don't know if you can call it entirely solid. I think 2% is a fine pace. It's an around potential pace, but not solid in the sense that the composition is not that solid. This is all in consumption, a lot of weakness in investment. Again, it's this global weakness in the industrial sector, and that's there in the U.S. So we'd like to see a little bit more of a broad-based growth scenario, which is what we're not seeing so far.